Good morning, everybody. It's Monday, September 25th, 5:29 a.m. Central Time. Grain markets just a little bit lower this morning. December corn futures down 1 at 476 and a quarter. November soybeans down 3 and a quarter at 1293. December Chicago wheat down a quarter at 579 and a quarter. December Kansas City wheat down 2.5 at 708 and three quarters. December spring wheat down 1 and three quarters at 768 and three quarters. We did have some rain over the weekend. Why don't we start there?
Yep. So weekend rains fell over northern areas of the Mississippi River Valley. River Valley areas along the Wisconsin-Minnesota border saw 1 to 3 inches of rain over the last 72 hours. But still, the river is 9.4 feet below normal at Memphis this morning. Government projections indicate that levels could hit a new record low as early as Wednesday. The 7-day forecast offers some lighter rains for the northern River Valley areas.
So the river this morning, and this is taking into account weekend rains, is 9.4 feet below normal or below the zero gauge. And the projection, despite these rains, is that by Wednesday, Thursday, we could make a new record low, essentially. The record low was 10.81 feet below normal, October of last year, and we could be there as early as Wednesday, according to this projection. The way that the projections work, this is a quote from weather.gov. River forecasts for this location take into account past precipitation and the precipitation amounts expected approximately 48 hours into the future from the issuance time. And this was issued at 3 a.m. this morning. So despite the weekend rains, and those were some substantial rains in those northern River Valley areas, but you also got to remember, like, a lot of those areas were really, really dry. Wisconsin in particular had been really dry. So I just don't know if the runoff is there. I don't know if this is enough. The government projection says that it was not enough. So this is not a positive thing for grain movement down the river, fertilizer product movement up the river. Just overall still a big negative for the markets, I think.
Large money managers were bigger sellers than expected of corn, soybeans, and SRW wheat last week. CFTC released weekly commitment traders of data on Friday. During the week ending September 19th, the funds were net sellers of 11,000 contracts of corn. They were net sellers of 29,000 contracts of soybeans, and they were also net sellers of 15,000 contracts of SRW wheat for the week.
The net short in the corn market that the funds are holding is about 150,000 contracts as of last Tuesday. That is the largest fund net short in the corn market since August of 2020. The range in the corn market, spot month futures in August of 2020, was 315 to 353. So I might make the argument that this is even, maybe it's a positive that the funds are short 150,000 and spot corn still at 475 and not in the low threes as it was the last time funds were short this amount of corn. So funds very much sour on the corn market, sour the SRW wheat market, and I would call that a very modest net long in the soybean market, although it's being reduced. So funds in the process of kind of lightening up this length in the soybean market.
So if you guys are not already subscribed to our premium content, you need to check it out. Joe, can you tell me about some videos you put together last week?
Last week was absolute dynamite in terms of the premium stuff. All the videos were really good, I thought. Shay was on with me on Thursday. Shay ran a survey, and we asked farmers, subscribers, and Shay's customer base about crop conditions, about sales. What does the average farmer have marketed or sold for 2023, for 2024? Also, like, what are farmers' biggest concerns? Is it marketing? Is it markets? Is it export demand? Is it margins? Is it drought? What are the biggest concerns out there? That was a really good video. We had some really good talking points, and then some absolutely fantastic stuff from Steve Nicholson. Steve is the head researcher of grains and oilseeds at Rabobank and has done some absolutely phenomenal research regarding the crush expansion. Steve was on with me last November, and we had a really great video, kind of a primer on the whole situation. And then the question last week was, Steve, is this still the real deal? Is the crush expansion, the need for more acres, the kind of positive outlook as it relates to the soybean market, is this still all the real deal? We talked about that. Really good conversation with Steve. If you guys want to see the premium stuff, go to standardgrain.com this morning. You can sign up. It takes you about 1 minute to do on your phone or on your computer. You just need a credit card, $50 per month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You get all the videos. I'll blast them over to you this morning.
Brazil's corn crop will help ease sugar prices. As Brazilian corn production surges, the crop is becoming a more profitable option to produce ethanol compared to sugarcane. Record high sugar prices are causing a growing number of mills to divert more cane to sugar production instead of ethanol. Over the last 2 years, the cost of manufacturing ethanol from corn was 16% less than producing the biofuel from sugarcane. Analysts estimate Brazil will consume a record 13 million tons of corn for ethanol this season.
Reuters did a really good job here. Some excellent stuff. Let's talk about ethanol in Brazil. Brazil is the world's #2 ethanol producer behind the United States. In 2021, which is the latest data I found, the U.S. produced 15 billion with a B gallons of ethanol. Brazil did 7.5. So they're like, a second place, but a distant second place. Ethanol for corn will account for nearly a fifth of all output of the fuel this season, and it was 5 years ago. So they're still producing the majority of their ethanol from sugar. Analysts from Data Grow, according to this Reuters article, say that by 2033, ethanol or corn ethanol could be about a third of total ethanol. The majority will still be sugar. So there's one other quote here regarding profitability. I think that somebody had one analyst said, anyone with money today is either investing in corn ethanol or adding capacity to produce sugar. So I guess the way I see it is that this isn't anything that's going to impact the markets today, but maybe big picture, if Brazil is using more corn for ethanol, maybe it takes some of their corn off of the export market, which could be a positive for us here in the United States. Big picture. So it's a big picture story. It's not a today story, but we'll see what happens. We totally have the wrong slide up here, don't we?
I just realized that. Yep, we
That's
missed.
all right. Okay. So here's the Brazil ethanol slide. Here's the next slide we're going to do about Chinese cooking oil. Go ahead.
Okay, so during the first 8 months of this year, imports of Chinese used cooking oil surged to nearly 384,000 tons. Used cooking oil is used in the production of biodiesel and sustainable aviation fuel. The product is cheaper than fresh vegetable oil and has a lower carbon intensity than non waste feedstocks. Since the Biden administration began promoting clean energy, U.S. demand for the product has spiked. Biodiesel produced from used cooking oil cuts greenhouse gas pollution by as much as 83%.
Just for the record, guys, we tape at 5:30 in the morning and we don't ever re-record anything. So if we make a mistake here, like we just leave it in. We don't edit, we don't re-record, we don't do anything. So if we have the wrong slide up, we misspeak. I know Matt said something wrong that was like a mathematical calculation last week, and people were commenting in YouTube. Like, guys, this is basically a live deal. Like, we don't re-record any of this. Okay, back to this cooking oil deal. Under the Inflation Reduction Act, biodiesel producers are eligible for a dollar per gallon tax credit. A new tax credit for SAF producers offers up to $1.75 per gallon, with additional credits for fuel achieving a life cycle carbon reduction of greater than 50%. It's kind of funny. So we ship soybeans to Brazil or to China, and Brazil also ships soybeans to China. And then they process them. They use the cooking oil. And now apparently they're sending it back to the United States, which is kind of interesting. But it speaks to the idea, I guess, that this renewable fuel deal and the push that's come along with the Inflation Reduction Act is all still very much in motion, which I think is positive. The markets, again, big picture.
So we had a cattle on feed report come out on Friday. Cattle on feed as of September 1st came in at 98% of year ago levels, which was slightly higher than the forecasted 97.4%. Placements in August were reported at 95% of year ago levels, which was just a tick higher than the forecasted 94.8%. Marketings last month were 94% of year ago levels, marginally lower than the expectation of 94.4%. The report is considered mostly neutral, as the actual numbers that were released are basically the same as the expectations that were forecasted.
So essentially, the numbers, they confirm what we already knew about the cattle situation in the United States. However, that does not mean that the market needs to rally on this, because it essentially was priced into the market. So yeah, it confirms the idea that, it's still a tight market. Numbers are still down, but at the same time, nothing outside the realm of expectations. Outside markets this morning, guys, fairly quiet, I guess you could say. U.S. dollars about flat. Stocks off a little bit. Bonds are off a full handle, which means rates are higher. Crude oil is up 15 cents in the November WTI at 90.19. Have a great day, guys. We'll talk to you Tuesday.